Hey everyone, Futures Brizio here, 6:20 p.m. on Wednesday, October 15th. Hope everybody had a great day. And just jumping in here to do our kind of daily update and roundup. Um, and as I stated in my video yesterday, since the U.S. government is still in a shutdown, doesn't look like it's going to end anytime soon. Um, for those of us that trade futures and use commitment of traders data, we're in a little bit of a loss. Flying blind here. As I stated yesterday, we're on a couple of weeks since our last update, and it doesn't look like it's going to end anytime soon. So we could theoretically be at 3 weeks come Friday of this week without an update. And for those of us that trade futures and use that type of data, it's really hamstringing. And in fact, I thought it was interesting. I got this email today from my broker, and I thought it was pretty timely based on that. It's talking about the shutdown, and you can see what it says right here. Historically, government shutdowns have not derailed futures markets. However, some markets may be more affected than others. For example, agriculture and commodity futures tend to suffer from a lack of key information over this period. And so what do you think they mean by that key information? Well, for a large part, when you're talking about commodities and agriculture, you're talking about commitment of traders. There also is some other data like that the USDA puts out on, crop information for agricultural commodities like, wheat and corn and soybeans. But COT data is certainly a big part of that too. So I just thought it was interesting that, it's something just you do have to be aware of. And, it just goes on to say, make sure you're careful and, practice good money management. And, hopefully when it ends, things will kind of trickle back to normal. So I just thought that was, good information and timely. And it really reinforces what I said yesterday, that at this point, since we don't have COT data, we have a few options, right? First, we either just don't trade at all until we get the data back. Two, we trade just on price action, traditional technical analysis. Three, we trade on price action with seasonality, if applicable. Or four, some combination of those type of things. And so I'm kind of leaning on 3 and 4, which is kind of a reversion back to just some more technical analysis and using seasonality when appropriate. Because I don't really feel comfortable doing a lot of technical trading, I've decided for the most part to start looking at longer time frames until we get some resolution to this shutdown. Okay. And so if we just take a look, so let's go in and look at some of these charts. And so I marked these up already. And I'm using the 12-hour chart for all of these. And so we get back to some traditional technical analysis here. So this is the New Zealand dollar. And you can see here, I've got a couple of indicators on the chart. Real simple, basic technical stuff, right? Trend line, moving averages. Now, let me tell you, the moving averages are a 5 and 10 period. Simple moving averages, nothing more complicated than that, okay? Now, you don't have to use any of these indicators, or you can use your own, but I've just chose at this point until I start getting COT data again, this is where I'm going to be. So I don't anticipate trading a lot here over the next, well, however long it takes through the shutdown. So I'm just kind of putting that out there that, my video making may become a little bit more sparse here, but we'll see. I am still backtesting as much as I can. The other way of looking at COT data that I went on over on yesterday's video, so I'm not going to rehash all that. So I am taking this time to try to, use that. So when I get the COT data back, it gives me another outlet. But from a simple technical price action trading, this is a pretty classic type setup, right? So we've got a trend line touching 2 points here. What I use the moving average for is for pullback strength. So what I want to see, of course, is the short. This is a downtrend, so I want to see the short time frame, which is the blue line, cross back through this yellow one and see price get back above and trend up. So this tells me when it's above these moving averages that this is a nice strong pullback. It doesn't affect the downtrend. The downtrend's still in place. We clearly have a trend line here that price is respecting and goes down. And so, this again is what I'm kind of anticipating, whether it happens here or price goes down a little bit more, but eventually to see price turn back towards the back towards the trend line, 5 period crossing over the 10 period. And then we get that touch on the trend line, hopefully a rejection and then a move down. And in addition to that, like I always say, market structure is still key. So right now, this is, our latest swing high on this downtrend, right? So as long as price is staying underneath here, then I consider this the swing high and the downtrend remains intact. Now, in addition, you could add like a Fibonacci to this and say, okay, well, draw it from the high to the low, and if we get back to say a 50% fib level, maybe prices go down a little bit more. This could line up with the 50 fib level if you want to use Fibonacci. Fibonacci doesn't always work. Some people are really big believers in it. Others think it's junk. I'm kind of indifferent on it, to be honest with you. I think it's, when it works, is that really just coincidental? Or is there really something to it? I don't know. So anyways, that's basically how I'm looking at these markets right now until we get this data back. The COT data on the New Zealand dollar was bearish at the last update, but again, that was coming up on 2 or 3 weeks ago. And so I don't know if it's changed since then, but clearly we're in a downtrend here. And so I'll be looking for pullbacks back towards the trend line, rejection. And then at that point, what you do is you go to a shorter time frame and you look for your entry. So if we look back at, this one right here, this last pullback, right, it was right here. All right, where the downtrend continued. So we can jump to a 4 hour. Here's the 4 hour. All right, we can go down to a 1 hour. Let's find it on the 1 hour. And we can see where we find our market shift. Here's the 1 hour right here, bearish engulfing candle, straight on down. If you wanted, you could, wait for a structure break and start trading it below this structure, like this last swing high, a swing low that led up here. But, this bearish engulfing candle would be enough for me, especially since we were up against the trend line and we kind of had this rounding price action where it kind of rounded out with all these very small candles with wicks, kind of just rejecting this whole area, clearly not being able to break higher. So that would have been enough. So, you just wait and you go up there to your low, you go down to your lower time frame and you just find that entry. And you can go as low as you want. I mean, you can go to a 15-minute. We'd have to find this on the 15. Yeah, here it is on the 15, right? And then, on the 15, again, this is that big bearish engulfing candle. So still, to me, this is still the best place to enter this trade would have been on that 1 hour engulfing candle right here. Okay? So that's pretty much how I'm going to be playing things. I went through and marked up all the charts. Pretty much the same thing. Here's the British pound. The British pound, as you guys know, is from the last COT update was bullish, but we have not seen that bullish turn yet. We've been going down essentially since middle of September. So about a month we've been in this downtrend. But it's pretty much the same setup. You can see we're touching the the trend line right now, and we do have a crossover on the moving average. But of course, we are also in the Asian session, or we will be this evening. And I'm not sure if that's going to really be the best time to enter trades. If we look at when these moves generally tend to happen, they usually are happening during the London session or the very early New York session. So, but we'll see what happens overnight. But here we are at this trend line right now. We do have the moving average crossover to the upside. So this is a valid pullback at this point. We do have very aggressive bullish price action here. And so we'll have to see. From a swing area right here, This is, to me, is the better swing area right here, because this is the last time it pulled up above the moving averages back to the trend line. But, you could make an argument that this is the swing right here, okay, because um, we pulled back. We had one single big candle pullback, and we did make a new low. But I just don't really feel. I just feel like this is more just in line with this downtrend. Um, because it doesn't have the moving average crossover. It doesn't tag the trend line. So you could use that, but I'm not. I'm going by this one up here. So again, as long as we hold this area, then we're still in a downtrend. Although remembering, though, again, the COT data is bullish on this market, at least the last time we had an update. So let me go back to the 12 for a second. Get rid of this one so we don't confuse ourselves too much. Down to the 1 hour. So here we are at the 1 hour. I had drawn this structure level before at the last swing, but now you can move this up to here. So, again, if you wanted to consider if this is going to continue, I'd want to see a break at least back below this 1 hour structure, which probably would turn our moving averages back down. But I'm not really care about the moving averages on this time frame. I'm not really looking at them. I'm just looking at market structure shift to see if the downtrend continues. All right, so on to the Australian dollar. Pretty much carbon copy of the New Zealand dollar. Again, you can see what I've drawn here. I'd love to see a pullback towards the trend line and then a push back down. This is kind of our structure levels up here, what I would consider the valid structure. There's kind of a couple of ranges, this one right here or this one, but generally it's this whole area in here. I understand this is a big range on a 12-hour chart, but any of this area up here to me is structure area. It's the last time we had the moving average crossovers back to the trend line. We had multiple hits in this general area, here and here especially, right in this couple of day period right in here, and then finally we sold off. Again, this little pullback right here I just consider part of this overall move down. We did not have the moving averages cross here, so what I again would love to see another big pullback and then a push down. So again, you have to be patient. These are high time frames. You're only going to get 2 candles a day painting on this, so you could wait a while. But again, that's how I'm positioning myself during this government shutdown. Okay, so now we go on to other futures. This is soybean oil. Again, pretty much the same thing. Again, from a seasonality standpoint, remember the soy complex is bullish right now, as is corn. Okay, from a seasonality standpoint, from COT, we really can't even discuss it because we don't know where the big traders and the commercials are at. But from a seasonality standpoint, we are still bullish. But you can see we've been trending down here for quite a while. So again, we have what is now basically a 3-point touch on the trend line. And again, I still consider this to be the most recent market structure. Because this did not make a new low. So although a break above this area right here, a break above here, a solid break above these highs could at least turn me more bullish, at least back towards this structure area here. But I still think overall this is the more important structure level that would change the overall downtrend to, to be more bullish. Okay. But again, we do have this area right here, and prices back against the trend line. It looks like the moving average is trying to cross back. So let's see, does this turn out to be a higher low and we start moving higher? Is that our seasonality cue? I don't know. I've been saying it for a while and I haven't seen it. There's just, in these higher time frames have not shown that we are following the seasonal tendency. So let's see what happens here. But we are back to the trend line. But we did not make a new low before this pullback. So that's interesting. It doesn't mean that prices are going higher, but when you start seeing these higher lows being put in, we had one here and now we've got it again here. Let's see what happens, right? That's all I can say. Soybeans, same thing. If we do get a break above this, even though this is not an actual key structure level, because at least so far it hasn't led to a new low, but still any break above here at least short term, swing higher. But a break above this one, which was the last touch major pullback here. Again, moving averages turned up, hitting the trend line, rejection, multiple rejections, and then a big push down. Okay, so a move back above here would definitely trigger a reversal to the upside, but this could be an early sign, right here. So again, let's see what happens. Do we just get a continuation? Prices continue to shoot down, in which case this will become our swing high, and this I'll take off the chart and move it down to here. But if this, fails to go lower and starts breaking higher, and it comes up and takes out this area, not just with a wick, I'd want to see a candle body close, not just throw a wick through here. Then that could potentially be an early sign of the shift back higher again. And again, we do have seasonals on our side, so for bullish positions. And again, not beating a dead horse, soybean meal, exact same scenario, still trending down, multiple touches on the trend line. Um, you know, we kind of had this the last time it hit the trend line, and we slowly pulled away with a lot of kind of indecision candles. And that's pretty much what we see here. So will we just finally get a big bearish candle down and continue to make a new low? And again, this is kind of the minor swing point. It's not a key swing high because it hasn't yet led to a new low, but it is still, I would still consider a violation of this a potential reversal area on a more aggressive scale. From a more conservative approach, then, it's this area up here because it was this area that led to this new low here. But again, same situation, moving average crossovers, back up, tag the trend line and down, okay? And again, these are all 12-hour charts, guys. You can do it on the daily, you can do it a little short time frame. I just split the difference. I use the 12-hour. It gives you a little bit more, action on the candles. You get 2 a day instead of 1 a day. But still, you're going to need to drill down to shorter time frames if you think there's an entry, to look for those market structure shifts. All right. Rice has been in just a crazy downtrend. So I mark this as the most recent swing because even though this has all been pretty aggressive, because we did have the moving average small crossover right here up to the trend line and now down. So this is a long way from here now on this time frame. But again, this has been pretty aggressive to the downside. So we get any strong bullish price action to smash through this trend line, I would be probably more leaning on a change of direction. Remember, seasonality on this market turns bullish in November. So I'm not expecting to see a big shift in the next couple of weeks, but eventually I think we will see a turn. And any major bull push through this trend line could signal that change, but that may not happen for a while. So in the meantime, still looking for shorts. All right, corn, not as clean, but I did draw this one in here. But again, corn also should be bullish right now. So again, here's our recent structure. We do have bullish price action heading back towards the trend line. We probably will get a crossover on these moving averages. The question is what happens when we get to this trend line. Do we just throw another wick or two and then continue to move down, or are we going to break this structure? This one's pretty close by versus some of the soybean market. This structure area is pretty close. So if this gets through here and we get a candle close through this line, that could be our shift higher. And remember, we did have a pretty good run up, bullish run up, and then we've had this big, is this a resumption of this downtrend from over here, or is this just a breakout and a pullback? Granted, it's a long one because these are 12-hour charts. But we do have structure areas sitting right here. And so let's see what happens when we get back up here, get that moving average crossover. Do we get another bearish signal down on a shorter time frame, or are we going to break through this structure level? And that will, to me, will shift it back to the upside. All right, and lastly, crude oil. Crude oil has just been tanking. I mean, we're down to like $57 $57 a barrel, which is crazy. We haven't seen prices this low since COVID started. Hold on one sec, guys. I'll be back in a moment. All right, guys. Sorry about that. I'm back. So yeah, like I was saying, oil It's not been this low since, since COVID. So started when we had the big crash there. So I don't know how much longer lower it's going to go. And again, if we look at seasonality for crude oil, it's down right now until, basically about early December. So although we do have a conflict because, again, the last COT, it was up in the extreme long area. So anyways, so we'll see what happens with crude oil. But anyways, there's our trend line, very obvious downsloping trend line, 2 touches. So I expect at least one more touch. So, and that's it. I did not do anything for natural gas. There's really nothing to connect here. So we'll just skip NG. So again, guys, that's about where we're at. And again, just getting back to what I discussed at the top of the video, I just thought this was very timely coming from my broker, just based on where the markets are with the government shutdown. And this is a nice little wrap. But again, I was particularly focused on the discussion about agriculture and commodity futures. Again, because we just are not getting that reporting data. And again, that's the COT data is certainly a big part of that. So, but so that's where I stand with everything now, guys. I'm, for me personally, I'm not saying I won't be trading, but I'm going to be looking for some of these longer term setups to play out. And so there probably won't be a lot of those opportunities coming here over the next however long till the shutdown ends. But we'll jump in there, and I'm going to continue to, back test and, some of this futures, some of this other COT data, like I discussed in yesterday's video about using an indicator like this, which is the another one that I found on TradingView. Again, this is just showing the large speculator commercial, non-commercial positioning. And, this is something that I can continue to backtest as I kind of go through this. And, that's it. So I did want to just spend a couple of minutes on this. And part of the issue with using this, and you can see I've got an open position in corn here. That I left open today. It is up a little bit, $812. So we'll see. I think the market is still technically closed. So when it reopens, we'll see. It'll probably fall off quite a bit. But anyways, part of the issue with using this is, as you guys know, the Commitment to Traders report is always a week behind, right? Actually, it's more than a week behind because the data comes out on Tuesday for the previous reporting period, but it doesn't get published till Friday. So it's already at least several days old by the time you get it. So when I was talking about this yesterday, where you can see like stair stepping, let me see if I can find an example here. Let's just talk about this. Okay. So you can see we had an uptrend here on the market, and you can see this was stair stepping up. Okay. This is again, these are the large speculators, hedge funds, trading houses, buying up corn. And this back in a little over under a year ago, and stair stepping up. And that's why, each one of these represents the week in between. This is an 8-hour chart. So that's why you've got, the vertical bars are the change. So you had, this week, and then it steps up, and then this week, and then it comes out the next Friday, and so on. But you can see what happens here. We get to the top, okay, and, well, this one, of course, is going to make a liar out of me because, as you can see here, it gets to the top, and then we have this drop right here where it actually goes down, and you can see shortly after that the market turned. Let me see if I can find one. Let's look at soybean meal. You see I have a trade open on this too, a whole $10 it's up. It really did nothing today. But let's see here. Because of that delay, I'm just trying to, let me scrunch this chart down. I really did want to cover this. Okay, yeah, let's talk about this right here. So you can see we have this uptrend. The market stair stepping up. We did have a pretty big pullback here, but overall the market is stair stepping up in the COT data. That's, again, this is the non-commercial traders COT data adjusting each week. We are overall in an uptrend. You can see we get up to the top here. We peak out, but look at the price here above this line. It turned and started going down quite a while ago. Okay. So if you were just following the COT data and not paying attention to price, by the time you got out of this trade and we had this finally had this little down one right here, you probably would have given back all, if not most, of whatever you made during this run up, depending where you got into it. You either would have given back a lot of profit or you would have ended up taking a loss or a break even or something. But either way, you can see even though the COT data is going still trending up, the market turned. And the reason why that's happening, guys, is because it's delayed, right? You're not getting, a real-time update on COT data. It's delayed by, like a week or several days at least. And so by the time the COT data that you get to see catches up, the price has already turned. So, that's the one flaw I have with this in backtesting. And so I was trying to figure out a way to help with that. And the best things I've come up with so far is this is a MACD indicator down here, and I don't want to add another indicator to the chart. Already, to me, this looks very cluttered. So I'm still backtesting this, but you can see the MACD had a crossover. If you can you can zoom in right here. Let me grab my arrow tool. Okay, right here. Oops, I can't do that right there because it's in the wrong pane. Let's try it right here. Yeah. So right here, we had the MACD signal line crossing, okay? And that happened right, if you look up at the price now, right as that first bearish candle happened. So if I was in this long, even though I wouldn't have had hindsight of this move up yet, this last move up, which actually would have been, again, too late. You already would have been in a negative position, or at least just peaking out. But you can see we also had the MACD crossover to the downside. So that would have been a signal to get out of this trade, even if the COT data wasn't suggesting it. Because you can see on the COT data, we went up right here. And of course, again, you don't have the hindsight of seeing this week go down and knowing the price was going to drop before that. So you're in a long position, basically from here up into here, right? And then all of a sudden, you can see prices already, if you look at where I have my crosshair, even just halfway through this week, because each one of these horizontal lines is a week, right? Because the COT data comes out once a week. You can see even a couple of days into this week, the price already fell off a lot. And you'd have to go back to the very beginning of the week when it first came out, like on Friday, that it peaked at its high, okay? So if you said, okay, well, I'm going to continue to hold this because it went up and made a new high, it was a really big stair step, up. But then you go about one day later and you see the MACD cross over, okay, basically right here on this first bearish candle. That would have been your signal to get out. Now, of course, the other method you could use, again, happens to be an 8-hour chart. You could go down to a shorter time frame and look for a market structure shift to the downside up here, and that probably would do it too. But I'm still trying to figure out the best way to do this. I really like following this, but again, because of the delay in the reporting of the data, you could really get yourself stuck and end up taking what could be a really good trade and turning it into a much smaller win or even a loss, because the delay on the COT data, if you're just following that blindly and not really paying attention to market structure, you could find yourself, by the time the COT data catches up and starts moving down, you can see right here it did. We had this first push down, and by then we were well into the downtrend. Okay, and then we continue to trend down. Then, this this MACD can help you give a little bit earlier warning. It still had this one big bearish candle right here that went down and then snapped back. So it still was not a great signal because it happened right here. If we zoom in, it happened right here at this big bearish candle, which did go down and snap back to the range, but that would have been a very good signal that, okay, we don't have the foresight of knowing what the next COT report was going to be, but we see the MACD running out of steam and crossing back to the downside, the signal line crossing through. And sure enough, by the time the next report came out, price was well on its way down. Now, it doesn't mean you just jump into a short position here, although you could based on this MACD signal, because you don't have the COT data on your side at that point. But when the next report comes out, you can see, even if you just picked up this little piece right here, that's a nice little trade. This is an 8-hour chart. I mean, this covers October 8th through 14th. This covers, more than a week of trading right here. Even if you just caught this little thing, then the price turned and went up. And then you can see right here, even though the COT data continues stair-stepping down, you can see this pullback right here. And again, I'm just pointing this out because this is a long time frame. You can see the crossover on the MACD, right in here during this consolidation. So even though we have an aggressive move down on the COT data, the MACD is warning of at least a pullback, not necessarily reversal, because obviously it did not reverse. It continued going down, but it gave you this signal. But yet, and then the COT came out, we did get a small stair step up, but a very weak one. And then it just kind of, you can see price turned and kept going down. We had the MACD cross back down again, and we never really changed the direction of the COT. So the COT is telling you still look for shorts here, but it's giving you warning signs of where you may want to either tighten up positions or take profit and just step aside while the market plays out what it wants to do. That is a drawback of these higher time frames, where if you don't have the appetite for, unless you're already like really deep into profit, like if you happen to get in up here and now you're down here and your stop loss is sitting, somewhere way up here or at break even, then, this, even though this is a pretty big pullback that lasted several days, you could theoretically withstand it because the COT is still telling you to stay in this trade. And you did get a positive COT movement here, but it was very weak. It didn't like come up and, really just, this is essentially sideways. And then it just kept going down. And you can see the downtrend continued all the way down into here. And then, we started getting sideways COT here. And the MACD actually, crossed over a bunch of times. So any exit in here would have proven to be great because you can see the market move sideways for many, many days till it started going up. And you can see all the crossovers back and forth on the MACD. So any exit in here would have been fine. The COT is telling you it's now flat. It's not really making any headway. One last little push down, and then boom, it bumps up again. Okay, so anyway, so I'm still testing this. I'm not sure if the MACD is totally necessary, but I'm trying to solve the problem for the delay that the COT data gives you. So anyways, I'll continue to look at this. Again, kind of a moot point except for back testing since we don't have updated data. But I do like this kind of way of looking at it. It's just a little bit different, again, than when we looked at the traditional COT index like this. This is basically remember, this COT index uses a fixed scale from 0 to 100, and it just uses basically 6 months of data, and it creates an index, okay, by plotting it up into this real extreme long zone or extreme short zone, okay, and kind of tells you that that's the direction that you should be looking to trade in, okay. And so that's what this is useful for. But this on here is actually the actual COT data. It's not an index. This is the actual net positioning of in this case, the non-commercial large speculators, and it's showing you exactly where they are. It's not using an index. It's using the actual raw data. So it's not as smooth looking and it has some inconsistencies. But again, this is an 8-hour chart. You may not be taking, like if you were going to figure out, how to trade this down move, well, this down move goes on from October 1st and bottoms out in December. This is 2 months right here. How many of you are going to actually hold a trade for 2 months? Realistically, in hindsight, you can say, oh, I would have held it through there. It's the downtrend was never, maybe some of you would if you're used to trading on high time frames. But if you're not used to trading on high time frames, you probably would have exited this a long time ago. Maybe you got back in, maybe you did get a lot of this move, but it was made up of several different trades. And that's fine too. That's perfectly fine. That's honestly probably how I would do it. I'd probably break this up into pieces. I would, get out when, I see maybe the MACD shift or the COT shift, and then when I see it resume back down again in the MACD, then the COT shifts back down, then I get back in. So along the way in this 2 months, there could be multiple trades in here depending what your tolerance is to hold it. But so you may not get all of these moves anyways, but even if you just grab pieces of these, legs of these, like maybe this leg or maybe this leg or even this leg here, that's all perfectly great. It doesn't mean you're not going to pick every top and bottom. And with the delay that the COT gives you, you probably are not going to. But it gives you confluence and confidence that you're trading in the right direction because you are following the big players that actually push the market. In this case, the large speculators that are trading, hundreds of millions of dollars in the market. They're the ones, besides the commercial traders, are the ones that are actually pushing price. Okay, and so this gives you their footprints and tells you which way they're going, but it's not perfect because it does have a delay factor. And so you have to figure out, how you're going to manage that delay factor. One way to do it is to use an oscillator like the MACD. So that's all I was trying to show here. So anyways, guys, I'm going to leave it there. I'm going to continue again to play around and back test and refine this. And then hopefully when we get COT data back again, I'll actually be able to put it into use real time and be able to show you some examples of forward-looking trades instead of just back testing. So, because it's one thing to back test in hindsight, it's another thing to use any system in real time and forward test. So, all right. So anyways, guys, I'll leave it there. Have a great rest of your night. Any questions, comments, leave them down below. Smack that like button, subscribe to the channel, and I will be back soon, and I'll catch you in the next video.